Hi, welcome to Christensen Wealth Management. I'm Michael Christensen, and thank you for taking time out of your day to watch this weekly stock market update for Friday, December 28th, 2018. Hope you had a very enjoyable Christmas holiday, and I wish you a very enjoyable New Year's holiday and happy New Year ahead. To go with the New Year theme, I'd like to do a New Year quote of the day. And this one is from Neil Gaiman. He once said, "I hope that in this year to come you make mistakes. Because if you are making mistakes, then you are making new things, trying new things, learning, living, pushing yourself, changing your world. You're doing things you've never done before. And more importantly, you're doing something." Those are some very wise words from Neil Gaiman. Well, let's quickly talk about this market, and this will be a relatively short video just because not much has changed. Last week, the stock market got pounded, and then Christmas Eve, we had the biggest down Christmas Eve trading day in history, and knocked the stock market back even farther, and many of the indexes were back about 2 years. But on Wednesday, the day after Christmas, President Trump came out and told the American people that they should be buying this market, and he expressed confidence in Jerome Powell and the Fed and Treasury Secretary Steve Mnuchin, and they reassured us that everything was looking great and it was a good time to buy. And so the day after Christmas was the largest Dow point move in history, over 1,000 points. It's absolutely crazy to see that unfold. And the Dow and the S&P and the NASDAQ were all up about 5%. But violent moves like that to the upside are not the sign of a normal environment. And today, well, this is the day after that, this is Thursday, the Dow was down like 500 to 600 points for a while, looking like it was going to completely erase that 1,000-point gain until a surge of buying hit the stock markets in the last 90 minutes and sent the Dow Jones back up into positive territory. So no trend has been established yet because all of the primary indicators in the intermediate and long term are all still to the downside. The stock market was basically in free fall for weeks, and stock markets don't just fall straight down. We were due for a bounce. And let's talk a little bit about where this market may be heading before it will run into resistance, and then we'll wrap it up and send you off on your New Year's Eve weekend. Let's take a look at the Dow Jones Industrial Average. In this chart of the Dow Jones Industrial Average, you can see that the Dow is back to where it was on, let's take a look, as of Thursday, the 27th today. The Dow is back to where it was on October 18th of 2017. So again, 14 months worth of stock gains were erased in about 2.5 months or so, or 3 months. And that's not to be taken lightly, because where are we headed? I am going to say that it's probably going to bounce back to these lows right here of February 9th. And I'll make that line a little darker. So February 9th and April 2nd. So those two lows right there are now the ceiling, or basically the ceiling for this Dow Jones rally that's heading back up again. So I think if I draw a circle here, those circles represent the low of February 9th, the low of March or April 2nd, 2018, and this circle over here is likely where the Dow Jones Industrial Average will run out of gas. The question is, how much farther is that? Let's take a quick look and measure that, and about 1%. So the Dow's got about 1% more to go before it runs into these two prior lows and this consolidation over here in October and November of 2017. So that would be about another 230 points for the Dow. Maybe we'll get there on Friday this week or next week, we'll see, but it's going to be very hard for the Dow to get above those lines and stage some sort of recovery. Let's take a look at the S&P 500 real quick. Looking at this chart of the S&P 500 over the last couple of years, you can see that we made this low on Christmas Eve this week, and that took the S&P 500 all the way back to where it was on February 15th, 2017. So back about 21 months, or I should say 21 months of stock market gains in this chart have been given away in about the most recent 3 months. And then we bounced off it. So question is, now that we've started this bounce in the S&P from deeply low territory down here, it's common for stock markets to bounce after a big drop. And where are we going? Well, I'm going to switch this over to a candlestick chart and then move this line up to the low of February 9th, 2018, because that is very, very strong resistance for the S&P 500 to get through. So it could rally up about another 1.7% to touch that line, and we'll just have to take that one day at a time. So that is probably all this S&P is going to be able to squeeze out on this bounce, and then we'll have to just wait and see what happens. But I see a couple different scenarios here over the coming months in 2019, and let me lay those out for you once I switch this chart to a 9-year chart. Here is the 9-year chart of the S&P 500, and I'd like to draw a line from the lows of March of 2009 way down here and draw that up and show you that the potential outcome that I had mentioned last week of the S&P 500 coming down and touching that line may in fact have happened based on how I've drawn this line. We had touches back here in 2011 after the original bottom in 2009, and we had a touch here, and then we had a low here on Christmas Eve of this week. So the S&P 500, based on this chart, could be looked at as having rejoined its 9-year trend and stopped all this euphoric enthusiasm way up here. So we may be able to hold this for a while, but if I move this line a little bit to incorporate more of the lows on this chart, something potentially ominous is revealed that I'm going to be watching very closely. Let me move this line up to connect with more of the points on this chart. And as of today, if I change that line to connect exactly to today's closing price for the S&P 500, you can see now that we have a lot of points on this chart. We've got one here in 2009. We've got a whole bunch of them here in August of 2011. Some here September 2011. Some here November 2011. Then this is a new one that's now touching the line, having adjusted the line. We've got June of 2012, November 2012. We got August 2015, September 2015. We broke it for a little bit there in January of 2016, regained it, but then immediately went back and bottomed out right on the line again in June of 2016, bottomed out again November of 2016. Still keep touching that same line, and then Trump got elected right here in 2016, and the stock market just went into overdrive on this rather enthusiastic path, this one right here. And then once that broke, the market came back down and broke this 9-year trend line. If this line does reveal itself to have been broken, which I'll zoom in and show you right here on Christmas Eve, the week before Christmas, we broke that 9-year trend line with this big red candle for the week. And as of right now, the week of Christmas, we bottomed out here and then rallied up and touched the line from underneath. If the S&P is not able to recover that 9-year trend line right here, then I am not sure where this thing is going, but it could go significantly lower, back to the highs of 2015 or the highs of 2016, or even this low down here before the election, which would be a pretty significant drop for the S&P. And just to give you some context, that would be from where we are today down to the night of Trump's election. That would be a drop of about 16% for the S&P 500. So those are some possibilities, but right now just use caution because the declining trends are still in place, and this market has only bounced for 2 days as of the recording of this video. Thank you again for watching this market update. Before you go, please do me a favor and click the subscribe button on this YouTube channel, and then click the little bell next to it so you'll be notified whenever additional videos are posted. And in the top right hand corner of christensenwealth.com and in the summary description of this video, you will find links to the website, Facebook, LinkedIn, and Twitter pages for Christensen Wealth Management. Please visit those when you have time and like or follow them while you are there. Well, have a great day, and again, Happy New Year, and I'll be back again in about another 7 days. And before I go, just remember that getting back to even is not an investment strategy. Right now, many things are still pointing extremely negative. It's only been a bounce of about 2 days, and it only bounced back just a little bit of what was taken away to the downside. So we need to see more movement to the upside before we stop being extremely cautious at Christensen Wealth Management. Well, have a great day, and I'll see you next week. Bye-bye.